Well, hello, everyone, and good evening, and welcome along to this live webinar. And today, I'm honored to be here with Jamie York, property investor and mentor, running the Aspire Group company. And Jamie, how are you? How things are going? We are happy to have you here with
Incredible.
us.
Yeah. It's going really well, mate. I think it's a really fun time to be in property right now. Loads of chaos around the world from global politics to local interest rates. And yeah, I'm just really enjoying the process to be fair. And thank you for having me here this evening. I really enjoy spending time with you and your audience on here. So yeah, hopefully I can add a load of value tonight.
I'm sure you will. So we have an agenda for today, but I think we should discuss something that arises during the weekend that is not in the agenda. But let me just share the agenda. Before we start, if you are watching this webinar on YouTube, feel free to subscribe to our channel. So today we start with a quick introduction. Then, Jamie, we'd be happy to hear your tips about building long-term portfolio. And I think this strategy also aligned with what we are trying to do at Lendlord, helping landlords to manage their portfolios for the long term. Then we discuss about deal sourcing and analysis. Also, we'll see what landlord can offer and some tips from you, Jamie. Then we will do some kind of live deal analysis together. We speak about the relevant metrics, what you think people should look at. Then we'll speak a bit about AI, and we will have a session for questions and answers. If you have questions during the webinar, feel free to drop the question in the chat. If it's relevant, we might answer. If not, we will have time in the end. The promotion for today is a coupon code for our premium plan, 50% off if you use the coupon code Jamie26. You will see during this webinar so many features that are relevant these days to landlords. And with the premium plan, you can get it with 50% off during this webinar time. The way to do it, either to click on the link that Avi will put, okay, just put Xenia on the chat, or go to your settings page on the plan details, click upgrade, then enter the coupon code Jamie. One second, Jamie 26, click apply coupon, and you will get both premium plans, the premium and premium plus, with 50% off. All right, so Jamie, what I want to discuss before we start is the Renters' Right Act information sheet. So during the weekend, I think it got published, and there is a deadline for landlords to share this guide with their tenants. I think if it's by the end of May, I think, and if not, there is a penalty of £7,000, I think.
Yeah.
Implemented, by the way, during this weekend, a way how you can share this sheet with your tenants, and or not just share it, but also make sure that they acknowledge it. So they actually acknowledge it, and I will show it after that how you can do it using the Landlord app. Um, but the Renters' Right Act is not just that. Like there are like several items that I think landlords should pay attention to about rent increase once a year, I think with 2 months notice. Of course, all the tenants evictions become a bit, I don't know if it's more difficult, but it's in a different way. And also you have the periodic tenancy agreements. So in a high level, I want to hear your thoughts about this and how it can impact the buy-to-let markets, how it can impact landlords. So over to you about the Renters' Right Act.
Well, thanks for putting me on the spot there.
Okay, okay.
Um, okay, so the renters' rights went to royal decree and it got signed off around a month ago. And in short, what it is the concept is protecting tenants a little bit more. Now, our opinions don't really matter on whether that's good or bad, but ultimately, what it does is creates fear in people. And it's much like everything else. A great example that comes to my mind is when GDPR came into play. Now, before GDPR, we already had data protection laws. And in the same way, tenants already have basic rights. They're just pointing it out that you need to really double down on them. There's very little that's new from a looking after the tenant point of view that's really changed. There's stuff in there like AWAB's law and that, which is pretty extreme, which is unfortunately where a young lad, AWAB, passed away due to severe damp in a property. And that's the only one that's quite an extreme one, which isn't going to be deliverable. And that's the one at the moment that land is just ridiculous. So, for example, if damp gets reported, it needs to be resolved within 48 hours, that sort of thing. But the reality is nobody's going to be able to do that. And so that's now up for consultation again. Everything else is pretty similar. And thinking back to GDPR, if anyone was in business, it was quite a funny time because data protection laws were there. Then GDPR came out, which was like, oh my God, everyone's terrified. There's going to be these fines and everything like that. And the thing that was funny about it is you had emails from companies that I haven't heard about for years. They've never emailed me in years to remind me that I'm on their list and I'm a valued client of theirs and everything like that. And so it's very similar to the Renters' Rights Act. So, in short, it is nothing to worry about whatsoever. It's just another tick box exercise. And ultimately, do you know the people that do need to be scared? It's shit landlords. And ultimately, I don't know about you guys on here, I'm good if the shit landlords leave the market. If a bit of regulation creates that, then no issue at all. Now, the problem comes from if you play this out. So we're going to give an example, and we're just going to assume there's 1,000 landlords that exist, just to make this a real analogy that you can think of. Now, if there's 1,000 landlords and 2,000 tenants that want to rent from them, that's pretty much what the UK is looking at right now. It's around 2 to 3 tenants looking for every available property, right? And then what happens is outside of when these changes come on, you've got the landlords that just this is the straw, and then there's another straw and another straw. Section 24 happens, then it's another thing and another thing. So, especially these more old school landlords, not that they're bad landlords, but landlords that were back in the day 40, 50 years ago and go, do you know what? I can't be bothered with this anymore. I'm going to sell off my portfolio. And then the problem is that's what happens. Think of every change that happens between 1 and 3% of landlords go, do you know what? I'm done. But here's the two things that happen. Number one, it's very rare that a rental property where a tenant gets evicted is going to then be sold to a buy-to-let landlord. It's usually sold on the open market. And so when these changes come into play, there's a good chance it's no longer sold to another investor, which means now instead of having 1,000 properties, now there's 970 properties. And that doesn't seem like a big deal, but as each one happens, it reduces. The big difference with this change is the fact that there's a rule in this renters reform that if you are selling your property, you can still kick out your tenant, right? So you can serve a Section 8 on them. It's just Section 21 that's been abolished, so no fault evictions. You can still serve a Section 8, but the small print is that if you kick out your tenant, you cannot re-let that property for 12 months. And so what that's going to do is massively increase the odds of properties not going back into the rental market. Now, on the other side of that, there needs to be rental opportunity for tenants. And if it's not being provided by us, private rental sector, then it's going to be the international investors and the institutions, so pensions, Americans coming in and buying billions at a time, all of these wealth funds and things like that. So if you play it out, here's what happens. Every change, landlords leave the market. Tenants celebrate because fuck you landlords, right? And we hate landlords. And then, of course, just basic economics. When there's less supply available and the demand is still high and increasing at around 2% every 3 months, by the way, in the UK. So rental demands increases about that. Landlord stock right now is 27% down from 10 years ago, and it's been increasing 2% every quarter ever since 10 years ago. So it's quite staggering the gap now. Every time that happens, rents go up, yields go up, and then, of course, lending ability goes up. And then, of course, prices go up. And so it is a hard thing the government's got. But the reality is, what it's good for is getting rid of shit landlords. But the reality is, if the government isn't going to fund the policing of this, which they won't because they never have, then all those shit landlords will carry on existing. And the real problem is, you don't end up protecting the tenants really. Doesn't really make that much of a difference. What happens is you lose some landlords, and of course, it hurts the very people you're trying to protect. So yeah, it's a change. We have to adapt to it, and what's important is the compliance. You have to be on it, and that's the real key thing. So I've had some meetings today because I own a letting agency, and again, you're really ahead of the game, Avi, because we've got Lendlord, of course, and when we've got purpose-built letting software, and the letting software aren't even doing it, but it is a legal requirement. And we manage, well, I own almost 200 properties myself. We manage hundreds more. And the reality is, we could end up in millions of fines if we don't do this. So, yeah, compliance is an absolute must. Overall, every change in the market is good for us.
Yes, absolutely. I totally agree. And I think that you spoke about being, I would take it to the positive, like being like an organized landlord. So if you want to be, I would say, safe, you need to make sure that everything is on track, that you have records for everything. For instance, for tenants eviction, let's say that if the cause is, I don't know, rent arrears, then you need to make sure that you have a log of all payments that, like the historical payment, historical arrears, the overdue, all of this stuff. So because of that, technology can help. If you, like, for instance, if you use Landlord, you can store and get records for the entire payment schedule through the entire tenancy period. Also, if you need now to change from a fixed period tenancy agreement to a periodic one, you can also do it with a software. If you want to audit all the communications, also again, I think it's much better now to adopt technology to be compliant. And the Renters ITAC actually, I think also is like another layer that force you to be more organized.
Yeah, you don't. This is the thing with technology now, is it can do so much of the heavy lifting for you. I want to be out there doing really good deals, creating great homes, making loads of money, helping my investors secure good deals. This is the sort of thing that we shouldn't have to be dealing with. And that's the cool thing about technology and AI now, is it can do so much of that heavy lifting so that I mean, for the sake of like couple of £100 sometimes with tech. I know the Lendlord you're doing like a whole year, right? I don't want to misquote it, a couple of hundred.
£99 for the premium plan and 299 for the premium plus. Yeah.
Yeah. Um, yeah, it's great because it's the equivalent of people that you would have, even if you outsourced it and you hired people to do this, it would cost thousands of pounds just a couple of years ago. So yeah, it's really important.
Yeah. So perhaps, Jamie, if that's okay, I want to share like 2 minutes just to show you how you can first share the information sheet with your tenants. So if you log into your landlord account, first, of course, you need to make sure that you have all of your properties in the system. You can upload by one or upload a spreadsheet. We have the help center here, so, or you can speak with the team if you need some help. Then you go to My Tenants and you need to log all of your tenants and tenancies. And then what we basically added during this weekend is for each tenant, if you click on the tenant, you will see on the My Documents, the tenants document section, the Renters Right Act information sheet. Okay, so you can click on preview to see. Basically, it describes everything here. It's not that the tenant needs to know, also the landlord needs to know that, but you have to share it with your tenant. So if you invited your tenant to their own dashboard, and you can do it, if you click on these three dots, you can invite the tenant. When you invite the tenant, you can select the documents you want to share or you have to share with your tenants. If you have inventory report, the right to rent, of course, etc. Then you select which documents are mandatory, and then you invite the tenant. After that, I will show it. I already invited this tenant. Let me, if this will work, I don't know. Okay, so this is one thing. If the tenant already like you already invited the tenant, then you can click on share doc. I already shared it. So you will have on the three dots share with tenant, okay? And then you click on force tenant to redocument. So when the tenant will log into they will log into their dashboard, they will see a pop-up with the information sheet, and they have to acknowledge they actually reviewed and read it. And then by that, like if someone will tell you in the future, did you share it? Then you can show that you did. And another option is, if you want to make it stronger, is to send it for signature. So on the premium plan, you have the electronical signatures. You can send any document from the tenancy agreements to basically any documents that you store in My Documents. And you can add a text, signature, date, and send it to your tenant to sign electronically on this document. So basically, they sign that they reviewed and read this document. So this is for the Renters' Right Act information sheet that it's becoming a mandatory for you as a landlord to share with your tenants. So now you can do it with Landlord. Some of the features are premium features. So just to remind you that you can upgrade with the coupon code Jamie26. And we are planning then like something that is more enhanced for the Renters' Right Act. So like to help you understand which agreements are now on a fixed date and you need to change them to be periodic tenancy agreements, which you can also do with the tenancy agreement generator. If you select this, assure periodic tenancy agreement. So this will allow you to generate a tenancy agreement based on the new rules. You will see that it's like there is no end date, like all the tenancy now are rolling tenancies. So you can do it as well, and we will add more features to support the compliance and like under the Renters' Right Act in the near future. Yeah, so this is for it, and now let's go back to the agenda for today. So Jamie, a few words about building a long-term portfolio. Perhaps if you can share quickly your approach of building buy-to-let portfolio for the long term. Perhaps a few words about the different strategies. You can keep and hold buy-to-let or flip properties, and or use the BRR strategy, which you improve the value of the property and then refinance for the long term to get rental income. So over
Yeah,
to you
sure.
about that. Yeah.
Yeah, so I'm very boring. And I'm very well known to say boring vanilla buy-to-let properties. And so for me, I like my excitement to come from making money, building my businesses. And then I want my investments to be as boring as possible, especially over the long term. And so, do I own HMOs? Do I own service accommodation? Yeah, I do. I've got a few million in those, but it doesn't represent a big part of my portfolio. And the reason for that is everything comes back to basics. So the only thing I cannot guarantee service accommodation will exist. I just can't. I cannot, honestly, if I'm completely honest, I can't imagine it existing in 10 years' time, if I'm completely honest. I just can't in the shape that it is. HMOs, I can see that working, but a HMO, house of multiple occupancy, even that has changed shape massively. Down from student digs with damp-ridden walls 10 years ago to now expecting a high rise, the latest USB-C, everything's perfect, that sort of thing. Like expectations change. But one thing I can guarantee forever is that an average individual will want to be able to live in their own house with a roof over their head, especially if they have kids, in privacy and security. That has been true since the day I was born. It will be true the day that I die. And for me, what I like to do is buy these homes. I want to buy these houses where somebody else is going to move in and make it their house, their home. So for me, I focus on 2 to 4 bedroom properties in general. And I would say 80% of the stock that I buy is as simple turnkey as possible. So very low refurbishments. We're talking 15,000 or less. And I just want to get a good deal day one. And so the number one thing that I like to work out is something that I call combined return, because people don't often know the investment terminology. But really, the investment terminology is called the IRR, the internal rate of return. And so for me, looking at capital growth is the number one factor that I'm looking for, long-term predictor. I'm looking at household income, which is a really, really important number, and then yield. I personally invest in 7% yield properties between 6.7 to 7.5. And that's a high enough yield where it's going to get me a good rental return over time. And it's not too high where it looks good on paper, but the copper's getting nicked every few months out of the property. And so that represents a good 70 to 80% of my portfolio. Now, do I buy, refurbish, refinance, BRR deals? Sure. Yeah, I buy those too. And I really like those deals, but they are not for your average investor. People act like it's just a really entry level strategy. It's not. You have to be willing to take on higher risk. You have to have a really good refurbishment team in place. And of course, you need to be buying those properties cash or bridging. Um, so yeah, that's my focus. Now, do I do flips? Yeah, we do about 10 million a year of flips. That's not in profit. That's 10 million worth of properties in flips each year. But in general, I like to keep it selfish like that. I just like to buy deals, keep them, and it is there's some unique deals that I will sell on, but in general, I try to keep as much as I can possibly afford. And then what I do is I deal package those same deals for my investors. So I've got a deal packaging business, pretty big now. We do about 500,000 a month in fees in the deal packaging business. And then I am one of my business's clients. I'm the biggest client for them. And so I use my profits from that, my other businesses, to just buy and buy and buy and buy. And the reason for that is, and I'll wrap this up with two final things, is there's a great book out there called The Richest Man in Babylon, and it's by a guy called George Clayson. And basically, the concept is don't spend your earned money. And so when I'm working my ass off getting the money from the businesses, I don't spend it. I invest it into property. And then my property produces rent, which is my silver. And then I can spend that. So if it takes a long time, but if I make 100,000 a month in my rent profits, well, I can spend all of that every single month. And then day one of the month, I have it all back again. Right. And that's the great thing about it. So, linking back to other strategies, it's not like I don't like other strategies, but my number one thing is, does this property work as a boring vanilla buy to let property? And if the answer is no, I don't care how good it looks as a serviced accommodation or social housing or HMO. I'm not buying it at all. I stay away from it because I call it boring because that is what I am with the investments. If it doesn't work as a buy to let, I'm not buying it. And then once it does work as a buy to let, great. Then I know my worst case is something that I'm really happy with. And as I said, you will not find a period in our lifetime where somebody doesn't want to live with a roof under their head, over their head. So yeah, that's my strategy.
That's great. And I have a question. So, what do you do but at that scale? So, if you now need to manage 100 buy-to-let properties that you own, will you outsource it to a company to manage because you have so many things to take care of? We just spoke about compliance. You have to deal with the tenants. You need to find tenants. So,
Yeah, well, I'm in quite a unique situation now because I own a letting agency. But back in the day, yeah, it was the hardest part because I'd be building these portfolios across West and South Yorkshire. That's where my patches are. And then I'd have a different letting agent there, different letting agent there. They all use different softwares and different approaches. And it actually become really difficult, if I'm honest, and especially as compliance goes up. And so, in the end, like I just decided, do you know what? Instead of getting pissed off at everyone else, I'll just build my own letting agency. So I did. And if I'm completely honest, I built it because everyone was so shit. And I was like, I'll just build it and be better than everyone else. And I'd probably say that statement was not true for about 2 years. I started and I was worse than everyone else. Realized how hard letting agents have to work. Like there is so much compliance and stress that goes into managing the property. And yeah, so now it's all set up. Um, and that solves all of the management side of it. And then the cool thing with my portfolio, like I use Lendlord now for the financing of it, which really helps a lot. So what I find really good is I can list my portfolio on, upload all of the information on it, and then Lendlord kind of just takes care of it. Like as a remortgage is coming up, it's like, yeah, you're 6 months away. We need to look at options. And it's all managed now. So yeah, I'm in a privileged situation, but yeah, like again, remember what I said earlier is like we want to focus on the right things and we're investors. Nobody on here should be finding their own tenants and doing all of that. Like you need to outsource something, whether it's to a person or tech. Like you need to make sure you're focusing on making the money.
I totally agree. Perhaps like another quick question. When it becomes like full-time job, like if you want to be a property investor and landlord for the long term, an average one, even not, I'm not speaking about owning like 100 properties.
Well, being a landlord never becomes a full-time job, ever. If you're outsourcing to the right people, you can have 5,000 properties. Um, there's probably a certain point where you're having to do some admin work. But again, times have changed. If say it was 100 properties, back before tech, you'd maybe manually have to go through your own bank account to make sure you'd receive it. But now on Lendlord, like you can sync up, is it zero in the bank account or something like that you sync up with?
We have
And
the
so
open banking. Yeah, you can basically on the premium plus, you can do like link unlimited bank accounts and like
yeah,
also use automation to manage the transactions. So it
yeah,
like
mm,
basically like the rules are there. So anytime you get rent payment, it will automatically allocate it to the relevant property, the relevant tenant, and will
yeah,
reflect your P&L. We just added, by the way, trial balance now for the accounting section. So you can also manage the assets and liabilities. You can see exactly not just the income and expenses. So it's like it's another layer that we just added, and this is in order to support and make it as digital, like another reform that is coming in, and landlord will
yeah.
be there as well. Like we are now working very hard to launch it hopefully in the next few weeks to be like
Nice.
in
Yeah, and that's it. And it's just got easier and easier. So, if it were 10 properties that you owned, um, yeah, you'd might maybe need to do an hour a week in admin or outsource it an hour a week in admin. But now even that, you just don't need it. If you were outsourcing that for 15, £20 an hour to somebody, so it might cost you £1,000 a year but now you don't even need that, because you can use stuff like that. I mean, that's really cool with the trial balances and stuff like that, because then it's just one place that you go for everything. All you do is sense check it, have the system flag it to you if somebody's not paid within 48 hours of when they're meant to, whatever it is. And it's just, yeah, life becomes a lot easier. When does it become a full-time job if you are personally aggressively building your portfolio? I'd probably say beyond 5 properties a month. And I know most people aren't building their own portfolios. Most people aren't building their own portfolios doing five a month. Um, but you might be deal packaging, for other investors. And you can do five a month with maybe like 10, 15 hours a week. I would say, so making 20, 25 grand a month from that. And somebody asked earlier, how on earth do you build a cash pot? Well, that's all I did. So back in the day, and still now, I package five, use the money to buy the fifth, package five or sixth, sorry. So I package five, buy the sixth, package five, buy the sixth. And so, yeah, my entire portfolio was really scaled up from deal packaging. And again, all I'm deal packaging is buy to let properties.
Amazing. This is basically leading me to the next topic, and this is basically property sourcing and deal analysis will speak when we will actually will analyze a deal. In terms of sourcing, I think this is the change now because we just released the AI sourcing. I will quickly show it. By the way, this is the trial balance. If someone asks, this is like on the reports page. You can go to the trial balance, and you have basically all the categories and the category tab. Actually, I don't have asset and liabilities in this account, but you will see it as well. We have tutorials in the help center, and premium users can also schedule demo call to get more help. So in terms of sourcing, um, so as you know, on Landlord, we have this on-market listing, which is an aggregation from estate agents. So you can see here properties that are listed on Rightmove, Zoopla, on the market. The good thing is that it's already linked to your account, so you can analyze the deals, you can save it on your watch list, you can get sourcing alerts. And now we've basically added and the option find detached properties, let's say below 300K with a garden that require refurb. Let me see if it will work. So basically you can actually source with a prompt. Then you can see all the properties that the AI found. Yeah, the good thing is I think that now it can actually save time when you source properties. Um, Jamie, like in general, if we speak about the old way and the new way, but for me, I think like we always get questions how you can find the right property to buy at the right place at the right time. So happy to hear your thoughts on that.
Yeah, well, there's two angles, and they come up with their own difficulties. So, in my experience, the best deals are always going to be direct to vendor, and the reason for that is when you're putting your own messaging out there. So, for example, I could go sell your house in as little as 7 days, or guaranteed offer within 48 hours, just stuff like that. And when you put some sort of fast time frame on it, what you tend to do is attract somebody that's got higher motivations to sell quickly. And so they're willing to come down on the price in return for speed and certainty. So if it's off-market properties and direct to vendor, the way that you're going to do that is often by putting your messaging out there. So you could do the old school ways of posting leaflets and letters and stuff like that. But honestly, it's so archaic. And so nowadays is setting up some sort of media buying. So this could be a Facebook ad, an Instagram ad, YouTube, and you can do that as little as, £5, £10 a day. Now, the challenge that most people have is they're not very well educated. And I'm not here to slag off educators at all, but a lot of educators out there are educating on what worked for them 10, 15 years ago, and times have changed, very, very aggressively. So yeah, you need to be media buying and putting that up there if you're going direct to vendor off market. The other thing is that creates a power dynamic. So instead of you going out there to talk to them, you're putting an image up, a message up, a video up where people are seeing it and then coming to you. And so it's a completely different dialogue there. Now, when you're on market, you can still find exceptional deals. The problem is there's thousands of properties out there, thousands of thousands. And frankly, Rightmove and Zoopla and On the Market are absolutely useless with helping you find those deals. And so the thing that I really like about what I just saw there is you kind of solve that problem where I don't know how specific you can be with that request. I don't know if you can go only show me properties that need works doing or anything like that. And so imagine you could go only show me properties that have been on the market for over 60 days and require refurbishment, and in whatever area. Suddenly you're going from tens of thousands of properties or hundreds of thousands in the whole of Rightmove. There's over 500,000. And then it's only showing you the ones that have been there for longer than 60 days, um, and needs refurbishment. Yeah, I mean, look at that. And I think that's pretty cool. The other
That's
thing I
the
really
parody
like,
too. I'm not sure like if it will catch the and Let me try.
or over 60 days.
We can index it and then it will take it. And over 60 days on the market. Um,
Yeah, this will be interesting.
Not sure it will catch. Oh, okay. No, it's added this week. But it's added this week to Landlord. I'm not sure if it's
It'll be interesting seeing like if that's something. Um, so but even there, I didn't know it did all that. Yeah. The other thing I liked, if you go back to that page, the first page where you've got the summary page, if you just go back one, because I think this is it. Like the challenge with being on the open market is how much time it takes you to go into each property. Whereas there, you can see it's like, right, buy to let, it's IRR, internal rate of return, 14.88%, and then the BRR on the right hand side, 23.26%. And so immediately what you can do there is just have a quick scan. Doesn't make it a great deal just based on those numbers straight away, but imagine you've got 10 properties and you quickly look at it and you can put it in order based on the AI analyzer. You can immediately go, this is the best deal, all the way to the worst deal, and then start from the best deal and start working your way down. Because theoretically, the best deal that is presented as is, you're going to have to do less negotiation in order to do that. So, yeah, for me, those are the main ways. And I think what I really like about the tech with Lendlord is you can kind of go, right, here's everything on the market, and I'm going to narrow it down to the best opportunities, which is pretty cool.
yeah, and also like you can actually get into the real analysis. So if I'm on the property itself, you can click on review and tweak, and then you can get directly to the analysis of the deal analyzer. What is the metric that you would look on? Like the let's if you need to choose one metric that you need to look when you analyze the deal, what it would be?
Well, so the number one thing I'm looking at is the cash that I'm putting in and the return I'm getting on it. So that's the most important thing that I'm looking at. And so that cash investment, yes, the first year return on capital is important, but actually it's that long-term IRR, the internal rate of return. Anyone that is properly educated around investment is IRR is the number one thing. Now, the thing that I do slightly different when you're looking at your metrics is there'll be something on the calculators that talks about inflation and the impact of inflation. Now, for me, on the inflation, I actually put it as zero. And the reason for that is I don't like taking account of inflation at all. And the reason for that is if inflation's 3%, then everything gets impacted by 3%. It doesn't make any difference for me at all. And so I just want to look at the numbers across the same thing. And so for me, I don't look at that. Um, the biggest thing that impacts the IRR is capital growth. Like rent is good, it pays our way. Cash flow is very important, which you can quickly look at by just looking at yield. It gives a good indication. And basically, is the yield higher than the interest rate right now? If it is, you're good. But if you look at that graph, almost all of the big money you're making is from the property value going up. And I think that's really important to understand because most of us are buying and keeping property with a mortgage. For every pound that the property goes up in value, you've only put 25% in. And so if you get 5% capital growth, it's not 5% growth on your money, it's growth on the value. And so let's say you've got 25 grand in a 100 grand property and capital growth is 5%. So now it's worth 105 grand. Well, you've made £5,000 on your 25 grand investment, which is a 20% ROI, return on investment. So yeah, for me, it's capital growth. And then you need to think about what actually contributes to that. So first of all, I'm going to look at the last 5 years of capital growth of the data, which if you do go on to, I think it's area analysis on this, so postcode insights, and that will load up. So I'm looking at that there. So I
Before
can
we
see
go,
the,
yeah, Jamie, I actually prepared an example.
oh,
So
cool.
perhaps we can go to the live analysis now. So,
Yeah.
because if you, let's say that I think most of the people still like looking at right with Zoopla and on the market. So let's say that you find this. you found this property.
Hmm.
Then if you download the Landlord Deal Analyzer Chrome extension,
Hmm.
which is available on the Chrome extension, perhaps Xenia can put the link to download the Chrome extension in the chat. And then you click on the Landlord Chrome extension. You need to decide which strategy you want to use, buy to let, flip, or BRR. Let's select buy. What do you prefer to analyze, BRR or perhaps BRR because it's more complicated and you can see also the refurb element.
Yeah, yeah, let's do it. I mean, the picture looks nice already, but let's see what it says.
Okay, and then click on continue to deal analyzer. So what happens now is basically we fetch all the information from this Rightmove page. We also analyze the estimated refurb cost and the GDV, and we will take you to the deal analyzer instantly. So you can see that we took the price from the this listing, and we took also estimation for the refurb cost, the GDV, and the expected monthly rent. If you click on property information, you will see that we also took some of the property information and also the photos from Rightmove. So you can
Mhm.
also embed them into your report. And then you can just take a look on the metrics. You can also run a property value estimation. Um, Actually, here I just did like average to average, but on BRR, if you are improving the property, perhaps you start with interior finish quality. We'll run it again before, but I need to add this 1 second. Let's do cancel 1 second. So let's say that you start with below average. Jamie, would you change also the structure, like the bed, like increase number of bedrooms and things like that, or usually you will not deal with that?
Yeah, I mean, one of the easiest ways to do a BRR is to take a two bed to a three bed or a three to a four bed, and obviously you need rooms that are big enough, but by putting up a stud wall and doing it properly, so you go from below average to very high, then three to four bed, it makes a huge difference. It's something like if you go from a two to three bed in the average area, it will increase the value of the property by 15%. So just that one change. And the further down south you are, if you're doing flips, these are really great. So I used to do a load of flips in London back when London wasn't crashing. But I used to buy one beds, reconfigure the property, make them into two beds, and sell them on. And we used to make about 150 to 200,000 pound profit per deal doing that. So it was a really nice way of making money.
Okay, so you can see it's actually suggested that after it will be 300, and he actually put the current market value, which is below the guide price or the suggested price on Rightmove to 210. And also it will give you some indication about the rental income before and after. So if you're happy with these numbers, you can click copy to analysis and then it will change the numbers accordingly. And now you can look at the deal based on this assumption.
Mm.
Um, Now you mentioned the postcode insights.
Yeah,
So
these for me are the most important things. If I'm completely honest, I couldn't really care about the property less. I want to make sure that it's a high demand property, but if it's a two to four bed property, you're all good. The thing that they're not building more of is land. Houses, they're getting more and more built, but it's the land, it's the area. And so the economics of the land really matter. So if you look there, the first things that jump out to me is number one, the average days on the market is 87. The average in the UK is over 180, by the way. So that's really good turnaround of property there. Then you can see household income. It's a really nice, important figure. The reason I look at household income is it doesn't matter if all of the economics support you, you need to make sure people can afford it in the area. And so, that, for example, the average household income 34,300 and it's saying that the end value is 300, that's quite a stretch for me. So for me, I'm looking at 34,300 to 300. That's like 9 times the household income. So I'm gonna just be a little bit cautious there. Whereas other, like, that's like London. where London's like 12 times household income. And so for me, that's a really good sign because that's a piece of data that's making me go, okay, let's think about that a second. Whereas most of my areas, the average household income per purchase price or value in the areas maybe 4 to 6 times. And what that means is there's a lot of affordability there.
Okay, interesting. So basically, you perhaps we should add it also as a metric. So basically, you will use the ratio of household income on the current market value slash purchase price. Or
Yeah, because it's more of an affordability check. If the average think about it in the UK, if you're doing a flip, for example, I want to make sure that people can actually afford to buy this property. And if the average household income in the area is 10 times it, for example, technically there's still an affordability in there, but we're not in London. We're not in an area in Leeds where people are earning a couple 100,000 a year and so they can put loads more cash in. And so if you think the average mortgage in the UK for a homeowner is going to be 4.5 times your salary, well, you need to be thinking about that. Because if the average salary or household income is 34 grand in the area, and then you're going to get 4.5 times that on a mortgage, let's go with 5 times that, which is going to be 170,000, 5 times the 34, right? So 170 grand. Well, if our deal's looking at exiting at 300k, then well, they're going to have to put in 130k in there. Now, it's not a deal breaker for me, but it is something to be looking at. It's an affordability. So then what I'm looking at is as I'm going down, monthly turnover on the right hand side, 43%, which is good. So on the rental stats, you've got the sales stats at 35, rental at 43. So that's good turnover. That shows that stuff's moving, which is a really good indicator. And then on the capital growth side, you can see it's had a slow few years. That would not make put me off at all. And it's always the reason why. And so as you can see, 22, 23, we had growth rates in the area that are way above what they should be. 10% growth, 13.5. That's really like way too strong of a growth. Doesn't put me off. It's just what was happening around there. You had lockdown in 2020, you had a bit of a correction through 2020, 2021, and then people regained their confidence and were like, right, let's go and buy. This is a more middle class area of Leeds, I would say, at these sort of rates. And that's why that's happening. So that's all good. And then, I want to see the property asking prices. You can see the average detached house is 282. If you hover over the information, the eye on the detached house for me, Avi, I think it says that's based on a certain amount of rooms. So if you just where it says detached house and 282, no, up a bit, up. There we go. There we go. So there we go. So that's really important for me. So that's 282 based on 2.6 bedrooms. So what the calculation's doing is there's 8 properties. It averages out to 2.6 bedrooms. And that for me is really good. So a 2.6 bedroom property is selling on average for 282. Well, ours is a 4 bed property now. So is it realistic to sell at 300? Absolutely. Very confident. And that's a figure that I'm looking at. The other things that I'm looking at, I don't know if you've got crime rate and tenure of property on here. So crime rate's quite high. So I'm going to do some further investigation. Crime doesn't really put me off. It's the type of crime. So always you're going to see crime. The highest crime is violence and sexual offences. It's one of the highest in the UK and most areas of the world, but it's really good to look at. So it's not going to put me off completely, but I am going to sort of have a look at it. So then the final two things is that I care about is the schools. Has it got good or outstanding schools in the area? Which it has got some decent schools. You can also search that online as well, but it's nice there. And then, do you have tenure of property in this?
give me like field or leasehold?
Yeah. So if you go on, no. So
Like in general, like in the area, you mean?
yeah, yeah. So this might be something to think about, Avi. On there is tenure of property. Like, what's the ownership versus rental in the area?
Gotcha.
That would be really cool. And it's more for a flip. Say I'm doing a flip on this. It's what is driving capital growth in the area isn't going to be loads of investors investing in the area. What it's going to be is home ownership. Homeowners are going to be the emotional buyers willing to spend more money, and it's those that push it up. Now, for me, there's enough data in this page to make a decision on this. So for me, the long-term IRR is 39.59%. You've got good capital growth over there on there as well. So I'd just be double checking that. And then that's it. You can see that's a really good investment. And then the final thing for a BRR in particular is how much money I'm leaving in the deal. And for me personally, for like just give or take numbers, if people want a rough thing, I'm willing to leave in £15,000 per 100K of value of property. So if this is genuinely, I run my analysis on it, and it's genuinely going to refinance at a 300K valuation, I'd be willing to leave in up to 45K. So, based on this bit of negotiation, because I think it's online for 220 and it said to get it or 230 and get it for about 210.
Yeah.
So yeah, to cover my ass a little bit, maybe I'd go in at 190 and start the ball rolling.
Okay, good stuff. Before we continue, I just want to do a quick reminder for the premium plan upgrade. So if you want to use the Chrome extension, unlimited postcode insights, and online valuations, you need to upgrade to premium. One second, I will find the link. Then if you can put it again. So either click on the slash premium or go to your settings page from the right top menu, click upgrade, and then enter the value Jamie 26 and click apply coupon, and you will get the premium plans with 50% off during this webinar time. So you get access, so many features. On the manage section, manage unlimited documents, use the open banking to automate your transactions, all the renters right tax support, making tax digital, etc. On the invest section, the AI sourcing, Landlord AI in general, we will show you in a sec few features of Landlord AI, unlimited online valuations, postcode insights, comparables, and more. So it's really worth it. So just go to your settings page and upgrade with 50% off. Okay, so our next topic before we go to questions and answers is AI. So before I show Lendlord's capabilities with AI, with Lendlord AI, I'm interested to know what is your thoughts about this shift, what's happening basically in the last 2 years, and now it's actually getting even, I would say, more involved with the agents. And like also our vision in Landlord is not just to help you with insights. At some point, we will want to help you as an investor to do the things. So you can create some kind of AI agent. Right now, LendlorAI is an AI agent that can query your account, for instance. If you want to, what was the rent payment that was missed last month? Who was the tenant? So you can actually ask LendlorAI today. But in the future, we will start to implement more and more things that will help you actually do more things. For instance, you can configure your sourcing agent, sourcing AI agent. So you, with your own preferences, you can define which sites you want to track, what is the frequency, what specific properties you are looking at. And then at some point, AI can also contact the agent, the estate agent, and perhaps, also put some offers down. So what is your thoughts about AI in general? And then we'll dig into Lendlord.
Yeah, AI is terrifying. Like it's so good. It's so good. And I think people go, "Oh, AI is the future." And I think they don't realize how wrong they are. AI isn't the future, it's now. And this is the thing. It's kind of like what I imagine it was like when the internet came about. And then it's a couple of years into having the internet and people going, internet's the future. It's like, no, the internet is now. The problem is most people don't get onto AI until it's way too late. So there's four levels of AI, but we don't really need to think about the super intelligence future and everything like that. The two that we need to be aware of now is LLMs, large language models. And now what you're going to hear a lot more of, maybe not in the next month, but you'll hear a lot more people talking in the next 6 to 12 months is about agentic AI. So LLM, large language models, is kind of like what we're doing about analyzing and taking data and incorporating it. And what's really powerful is being able to do deeper levels of research and analysis without you needing to worry about the complexities of sourcing the data, analyzing the data yourself. And that's kind of what Avi just showed you in that, and it's insane the level that Lendlord does it. If I'm completely honest, probably the most advanced that I've seen in property so far, especially when it comes to locating the deals, analyzing the deals, and tracking things. And then, yeah, I didn't know you were looking into agentic AI already, but once you've got agentic AI, which is basically have it honestly, it's like having a virtual assistant apart from your virtual assistant, is smarter than most people you've ever met in your life, can do things quicker than anything you've ever seen in your life. And, it won't be long where you genuinely couldn't give a task list long enough. You could spend an entire day where you just typed up task list, send it to your agent one day, and then you'll go to sleep, wake up, and it's all done. And I think that's the crazy thing. So yeah, I can't express highly enough that you need to be all in on AI now. A lot of people are scared of AI because they think AI is going to replace them. And here's the thing that I keep saying to people, and including my team, I've got an office of 40 people across my group of companies. And I say AI won't replace you. Somebody that embraces AI will replace you. And if you think AI is like steroids for your productivity. That is the best way that I can explain it. If you're not using them, using AI when everyone else is, you're going to die out. You're going to die out. You will. And so, if you want to be successful in today's age, you need to be one of the early adopters because this time next year, you just won't keep up with everyone else. You will miss out on every single deal out there because everyone else that is using stuff like Lendlord and its AI and whatever agents it's going to develop, they're just going to be at the deal the moment. I mean, within seconds of a deal going live, you'll have the agent getting in touch like that. That is how powerful it is. And then it's just about getting the right ones because then everyone fancies themselves an AI company straight away because they think they're going to get the AI valuation and that's it. And so, stick with fundamentals. One thing I really like about you, Avi, is that you liaise with property people and you take feedback on board. And that's one thing I've noticed by being on his webinars is whenever I sit there and I'm like, oh, Avi, it'd be really good. Like the household income. You didn't have that on there. I was like, do you know what'd be really good? It's household income. The next week you've got it on there. And I'm like, oh, okay, cool. And that's what I really like.
Already wrote that I need to add the ratio between household income to the current market value, and
There you
also
go.
also the tenure, like the proportion of homeowners versus rental in
Yeah.
another important thing. Yeah, this is the thing. Like you need to get the feedback and implement back. And yeah, and regarding AI, I think I totally agree with you. The thing I think that important for companies like Landlord and other softwares is to, how you say, like you need to take the AI and make it more accessible and also more vertical. So what we are doing today on Landlord is instead of getting the first step, and this is the easiest thing to do. So instead of getting the information to ChatGPT or Gemini or Perplexity or Claude, we actually put the models on your Landlord account. So for instance, and also we embedded some flows. Let's take this example of AR refurb estimation. Okay, so if I'm looking now on this property, when you click on AR refurb estimation, we actually send the information to LendlordAI, and and now it will ask you some questions just to fine tuning the result, and then based on your answers, it will provide you with an estimation for the refurb costs. They just need to answer by, the numbers. Here basically allows me to pick severals. Mhm. It's also based on location. And okay, so now I received like estimation. It also will tell you the assumptions and the breakdown of the costs. Then ask me if I want also the timeline, and I can get some projections of the timeline of each item in my plan. So this is like one example. Another thing that you can do is just to summarize the listing with AI. But basically, you can query anything within your landlord account based on your data. Yeah, so basically, this is it. And of course, we keep enhancing and add more features, as you saw, like the sourcing with AI. And also on the finance side, we are using AI to help us mitigate risk and things like that. Okay, yeah. So, and LendlordAI is limited for basic plans. If you want to use it in a higher capacity, you need to go to the premium plan, which we have the Jamie 26 code to get it with 50% off. And if you want unlimited use of LendlordAI, you need to upgrade to Premium Plus, also with the coupon code with 50% off. So, Jamie, do you want to take some questions?
Yeah, sure.
All
Yeah.
right.
Hit me.
Yeah, we'll start with the beginning of the chat. Second, yeah, we will upload the session to our YouTube channel. In the meantime, perhaps, Jamie, you can perhaps few words about Aspire and how people can reach out to you and the team, how they can follow you. I believe most of the people do, but on social media, etc.
Yeah, sure. So for those people that don't know me, I started in property about 11 years ago now. So I kind of screwed everything up very early, all of the typical mistakes, trusted the wrong people, didn't get educated. I lived in London at the time. I end up buying terrible properties. Um, Up north, and it just didn't go well for me. And then I end up sort of turning that around, getting educated, and started scaling up. So, like many people, obviously you have grand aspirations of building portfolios and everything, but I didn't have the money at the time. So I thought a good way of getting started would be deal packaging. And so for me, the reason I like deal packaging is it gave me the opportunity to learn more about property whilst finding these opportunities for investors, which surrounded me with money, which is obviously what you want, and surrounding me with deals. And so I started building it out and going from there. So I learned a load of lessons on the way. Fast forward to now, we've done almost 1,200 deals, which is insane saying that out loud. Purchased a couple of hundred myself, most of which I kept, some of which I sold. And yeah, that's it. It's now. And then what I started doing is building up the supply chain. So I was looking at these product-based businesses, and I really liked the fact that as they got bigger in one set, they bought the next bit, the next bit, the next bit. So then what I started doing is building up the supply chain. So I started with the letting agency, so I could source people to deal, and then I could manage the deal. And then what I started bringing is refurbishments in-house. So now I manage refurbishments in-house, which is really difficult if I'm completely honest. And then bringing the mortgage brokerage in and sort of looking at stuff like that. And so, yeah, the idea is to partner, and we're obviously in talks on that, Avi, on how we can make that work. So that was really good for me. And then when I started making more and more, I really liked the education sector, and I started looking at education, but I didn't like. It's not that I don't mind educators making a load of money, but I noticed a lot of educators were making the money from education rather than property. So I wanted to not do anything in education until I was making 1 million a year in property. So I did that. And then I started my YouTube channel. So most people, if they want to get genuine value from me for free, check out my YouTube channel. It's Jamie York. And then what I can do is, Instagram if you ever want to chat with me, which is just Jamie York Official. And then all of that's for free. I put out as much as I can. And then if anyone wants to get in touch about either us finding them deals, which are literally just boring vanilla buy-to-lets, the stuff that I spoke about, or if they want to get educated, then we can have a chat. But no pressure. My YouTube's pretty good. And hopefully just adds loads of value.
Highly recommended to follow Jamie and to subscribe to Jamie's channel on YouTube. And also, he started, like, I see that you are more and more on Instagram as well. Um, and I think this is like more short reels. You have it also on YouTube. So on YouTube, you can get, what is the average time to be 10 to 15 or even 20 minutes videos? Uh,
Yeah, I've started doing longer stuff. It's yeah, so 15-minute videos, but then I'll do like 1 hour deep dives. And I really like doing that. So I did one the other day, and they absolutely flop as videos because most people are lazy because they don't want to sit down and watch an hour. But like I really like doing like deep dive immersive stuff for people. And I did one on Facebook ads the other day. And yeah, so I do more and more stuff like that. But yeah, anything I can do to sort of add some value. Um, it's pretty cool.
Good. So, like let's say we have so many questions. So we try to pick the relevant ones just to be on time. Um, I'll start with the first one. What's the biggest platform to sell package deals? Is there a platform for that?
Yeah, there are platforms. It in general, I don't really use platforms to sell deals. I mean, the biggest platform, of course, is Rightmove, and of course, you can package deals for that. And but in general, I don't use platforms. I think I'm not saying that the person that asked this question is this, by the way, but every time you try to be lazy, you can near guarantee you're not going to make money. And this is the biggest problem. So many people are drawn um, into property looking for quick wins. But if you go, how do I find great investors, build deep relationships with them so that they trust me? Then your game will change. And here's the thing, say, I don't know how much money you guys want to make, but say you want to make 100, 150 grand a year in profit. Now, I know there's people on here that want to make millions, but if you want to make 150 grand profit, you need 10 investors, 10 good investors. And so stop thinking about platforms and all of those sort of things, because actually the problem with platforms is if there is a famous platform for it, then everyone gets to know about it. And so you're competing with everyone else's deal. What I'd rather do is build a great relationship. Now, a couple of people asking what deal packaging is. Deal packaging is the best way of thinking about yourself is think about yourself as an estate agent, but instead of representing the vendor, the person selling, you're representing the investor. And most people fuck up deal packaging because they approach it like an estate agent, which is wrong. You'll hear idiots, not idiots, but you'll hear people going, find a great deal and the money will come. Yeah, don't try and find great deals and then the money will come. What you want to do is attract the investor, retain their service or your service up front, and then start finding a deal that matches the criteria. And that's why most people struggle with deal packaging at the beginning, is because they're approaching it literally the opposite of the way you do it. So don't think about a platform. Think about how do I attract somebody, which is often with a good message that you put out there organically and through paid ads, and then have a conversation and take people through a journey of where they're at, where they want to get to. And then what you do is you double down on software. Landlord's great for it, for finding the best deals for them and then match them to that criteria.
Okay, good stuff. So, seeing as most of the process is up to the solicitors, okay, how you can guarantee a speedy deal. So, Jamie, I think I didn't mention, but the finance options on Landlord are available either from the finance tab. You can get live products for mortgages or bridging finance, or if you are already analyzing a deal, in one click you should find indicative terms for bridging. Or if it's a buy to let deal, let me select one here, you should see also the mortgage products available. So Lendlord is integrated into live feed of mortgage products. So you can also get the mortgage illustration online, start to submit application, and basically track the process. In terms of speed on bridging, we now offer, we have products that offer dual representation on legal.
Mm.
Yes, solicitors usually slow down the process, okay? But if you do dual representation, from our experience, it speed up the process. It's basically one legal firm represent both the lender and the borrower. So highly recommended. We also introduced some products with bridging that we can go up to 90% of the purchase price if the market value supports that. And we have many cases that it actually was the case. And also we fund the refurb costs. Like we have products that can fund the refurb costs. So I will not, we don't have time to do a demo, but just go to Landlord for any deal, click on finance this deal, or go to the finance tab and click on bridging finance and start a quick questionnaire to get indicative terms to fill it. And also you can schedule a call with our team. Yeah, let me find another question. 1 second. Jamie, if you can help me with the question, because I'm trying from the beginning, perhaps you can start with from the end.
No worries. I'll fire through some. So, been watching, been binging your YouTube, Jamie. Thanks for your wisdom and property investment. Cheers, Charles. How do you start deal packaging? Do you need qualifications? No, you need some basic compliance. So you need to be part of an ombudsman. I just go with the property ombudsman. You need anti-money laundering, and you need some professional indemnity insurance. So you probably need about 800, £900 of insurances. And ultimately, you just need to start building a brand around yourself. And, there's so much room in the market to make money and build portfolios for other people. But ultimately, Alison, like you just need to educate yourself around this. And look, what I don't want to do is just pitch my education company. It's not really my style. But if you go on my YouTube, I've got videos on how to start it out. And then if you guys want, you can DM me on Instagram because I run free web classes. And yes, I sell a course on there, but no high pressure. You can just book in a call and have a chat with us. But ultimately, get your compliance in place, get everything in. And if you do want to have a chat, you can just DM me on Instagram and I'm more than happy to help. So yeah, that's the sort of angle that we go through on there. But get your compliance in place, then build your brand and focus on investors first, and then get them locked in with their criteria and then start going through. So yeah. And then James, how important is capital growth for decision making? Hi James, how you getting on, buddy? Welcome. Making when buying and what is his key percentage number to look for? Percentage capital growth, which you can find on Lendlord, postcode searches, and postcard data selection. Great question, James. So, capital growth is the number one decision maker. Now, I obviously want to look at all of those things because making an investment is a holistic approach. But capital growth, for if I'm buying for a long term, this is not a flip or anything like that, but it is the number one indicator. The reason for that is it's the number one indicator for increasing wealth because your number one reason for building wealth through property isn't cash flow. Yeah, that's nice, but that's not how you're becoming wealthy. It's inflation. And it's inflation eroding the value of the money, which is why we use leverage and debt. Not qualified to give you financial advice here, by the way. So none of this is that. But inflation erodes the value of debt. And so, people go, well, if you're so wealthy, Jamie, why are you in so much debt? Well, my debt levels are getting closer and closer to 30 million. And it's like, well, yeah, I hope to, by the time I pass away, we'll be hundreds of millions in debt, if not billions in debt. Who knows one day? But the reason for that is inflation is eroding the value of money. And that does two things. Number one, it erodes the real value of your debt. But what it also does is it increases the cost of labor, bricks, mortar, and wood, which obviously all goes into building properties. And so the value of your property goes up. So capital growth is really important to get the highest return on your money, the ROI. And the way that we're going to access that is every 5 years, we're going to raise a new mortgage at a higher value against a new value. We're going to be pull out that money debt tax free to be able to invest again. So that's why it's so important. If I had to put my finger on a number, the perfect number would be 5% capital growth year on year average. Now, remember, the past doesn't guarantee the future, all of that. And what I'm looking out for is any ridiculous spikes. So, if you have a couple of years where it's like 15% and then that skews the average, it doesn't mean I'm going to ignore it. But what I want to look at is an average that sort of goes over a 5, 6 year period is going to be really good. And then ideally, what does it look like without that extreme year? That's going to be really powerful. So if you can see 5%, is really good. And the reason for that, by the way, is I'll just give you a very quick number. If you could do a 7% yield and a 5% capital growth, you will triple your investment every 10 years. There you go. That's the easy number. So if you get a 7% yield and 5% capital growth, you will triple your cash every 10 years. And that's not even taking account of the money you're going to pull out at year 5 and year 10 to then invest again. Which I think if anyone said that, I think that is a crazy return on investment, especially when you think of it's bricks and mortar, safe as houses. So yeah, 7 and 5, your magic numbers.
Nice. Noted. Where are you with buying in your own name? Ah, okay, versus buying in a limited company. Like,
You need to get personal tax advice, but I'm just going to tell you, almost guarantee buying in your personal name is a bad idea. Like I can't say that for a fact without knowing your personal situation, but we did 196 property transactions for investors last year. So that's not my purchases. 196 transactions for investors, and only one of them purchased in their personal name because it made sense. 195 of them were in limited company names. The big thing is about wealth preservation and protection. So there's a lot of changes going on in the market, most of which impact those in your personal name, not a limited company. Because if the government were going to make a change in a company setting, they would have to change the rules of every company in the UK. And so when you're building wealth, usually you want to protect that in a silo. And the way that you're doing that is in a limited company. So again, I can't give you personal advice. I'm not qualified to. All I can tell you is I can near guarantee any accountant that you talk to will say put it in a limited company.
okay, good stuff. Do we have any question you think we should still like we can answer? Let me see. Quick on the 7.5. Is it 7% gross or 7% net? If net, what was deducted before getting to this? Yield usually is a gross number, no?
Yeah, yield. People really get confused about yield because all yield is your rent times 12 divided by the purchase price. That's it. Go, but yeah, but you haven't taken account of the mortgage. Yeah, yeah, I know. That's what a yield is. So a yield is a gross yield. And the easy way to think about it is if you bought it in cash, what do you get from it? There you go. That's the easy way of it. It's thinking like if you put the same money in the bank, what would you get from it? So it's always a gross yield. When people say net yield, I always find that quite interesting. Because the problem is, what does net mean? Well, net means after everything, right? And
Yeah.
it's like, so you have to take everything off. But even then, net doesn't really mean net. Because then you've got to take off, well, tax. What about net, which is two T's, which is tax. So yeah, I never, ever, ever, ever look at that number. It just personally doesn't mean anything to me. So gross yield, it's a really good indicator. Doesn't mean anything in terms of your return, by the way, just to be clear. But 7% gross rent is a really good indicator. So if you've got £100,000 property and the annual rent is £7,000, that's 7% yield.
Okay, good stuff. So, before we are ending this webinar, we will end this webinar. Let me just remind you to upgrade to our premium plan with a 50% off using the Jamie26 coupon code. We will keep the session open if you still want to do it during, I would say, the next couple of hours. Just click upgrade from the settings page, enter the coupon code Jamie26 and click apply coupon. Also, if you want to schedule calls with our teams on mortgages and bridging, I put the link tree, put it again in the chat. So feel free to schedule calls. Um, okay, Jamie, like, you want to summarize this webinar and before we say goodbye?
Yeah, sure. I mean, first of all, I think the great thing about doing this is you get to see what is going on in the industry and see what the tech can do to support you. And for those of you that are serious about scaling something, putting that 50% discount code on. I tell you this every time I'm on here and you ignore me every single time, Avi, is put your fucking prices up. And you always ignore me because I know why. Like, if anyone doesn't know how Lendlord makes money, it's the fact that you use the platform so much, and Lendlord will lose money the more you use it because obviously the AI costs a lot to put on. But hopefully, you're going to end up scaling your portfolio. And Lendlord makes money by being the money to help you grow, the bridging and everything like that. I've used them a lot. Their bridging, their mortgages is absolutely incredible, the service. And a few people were talking about, well, how does this compare against other AIs? They all do something different, but the ones you mentioned, is about, I won't mention the name because I think it's a bit rude being on somebody else's platform saying that. But, the ones you mentioned, the people asking, it's 3 times the price per month. And so for £50 for an entire year of using premium, I think it's ridiculous. So I tell you every time, I know you're going to ignore me again, but I think you need to put up your prices on there. But for those people that are on there, getting access to all of that for 50 quid, I think is genuinely incredible value. I think it's absolutely ridiculous on there. So yeah, I think people, if you're here and going all in and you're looking to source and scale, I think it's a no-brainer. But for those of you that are new to property, honestly, just back yourself wherever you're going. And that would be my final thought is a lot of people go through trying to build a property business and they're not focused on the right things. And by turning up tonight, I think it's a really good first step. And even if you're here just exploring the platform and it doesn't do what you want it to do, great, that's cool as well. That's why Avi puts these things on so you can learn, you can digest things and immerse yourself. And for those of you at the beginning of your journey, you've got a really exciting roller coaster coming up ahead. And just make sure you're doubling down, back yourself, whatever that means for you. Surround yourself with the best people, get the best tech available to help start yourself and scale yourself up. And hopefully tonight's been valuable for people. Um, it's a bloody exciting journey. And what I will tell you right now is whenever there's a load of shit going on in the world, politics, wars, everything else, the more change and chaos that's going outside in the media, the more opportunity there is to make money. And believe it or not, there's more millionaires made in a recession than a boom. So the more change, the more chaos, the more opportunity. And as long as you step up and go all in, you'll get fantastic results.
100%. Great words. Thank you very much, Jamie, for your time this evening. It was very helpful. I also, like every time we speak, I learn more. So thank you very much. Thanks everyone for joining. We will see you in the next webinar. Don't forget, if you have tenants, you need to share the information sheet with them on the Renters' Right Act, and you can do it now on Lendlord. You need the premium plan with 50%. So thank you very much. Thanks, Jamie. We'll see you in our next webinar, hopefully in a few months. Thank you very much. Thanks, everyone.
See you, everyone. Bye.